Tim, if say a finance broker has a client that they may suspect of suspicious activity, and if it's appropriate during whatever checklists and requirements are put upon the broker that they need to do a level of due diligence to maybe reference check a name, is there any technologies or anything available that will help them do that?
Certainly, there are tools around that are available to that. Deloitte actually makes available a tool called AML check, which is a simple web-based tool, enables you to do a check against a name, and that should fit well inside your program. There are websites available, the DFAT website, for example, where you can also do checks against some of those names, and it will assist you to make those sorts of decisions.
Obviously, the AML check program by Deloitte has been rigidly tested, and my understanding enters into a global database as well. So it's an exhaustive style of checking capability that's available. And I understand, well, part of our relationship with Deloitte is enabling our members to be able to access that style of technology. So I think that's something that's of extreme importance to the members, and also how does one comply to this legislation? These are some of the processes and steps I think people may easily trip over if they're not careful. So that's excellent. Liz, critical milestones, dates, AUSTRAC enforcements, what have we got happening there?
Okay. I've already mentioned a couple of the critical dates. Of course, the 12th of December this year is when the obligation to have both Part A and Part B programs comes into effect, and also the obligation to actually identify what we refer to as post-commencement customers. You don't have to go back and identify customers who were customers prior to the 12th of December this year. It's just your new ones. Unless, of course, there is some trigger that makes you concerned that perhaps your customer isn't who they say they are, some other reason for suspicion, then you must go back and identify them again. 12th of December 2008, the ongoing customer due diligence requirements come into effect, transaction monitoring programs are required, and on the 31st of March next year, your first compliance reports to AUSTRAC will be due. We are intending to write a letter to every reporting entity that we can identify by December this year, informing them of their obligation to lodge a compliance report by March next year, and also informing them about something called AUSTRAC Online, which will mean that they can interact with us in relation to reports online. I should note, for those who were cash dealers under the Financial Transaction Reports Act, the obligations under that Act do continue until such time as the new obligations come into place. So reporting obligations, for instance, which start next year, it doesn't mean you can stop reporting under the FTR Act until then. There is a 15-month period which we refer to as the facilitated compliance period. The Minister has given policy principles to AUSTRAC, which we are bound by, that mean we can't take civil penalty action for the first 15 months after each obligation comes into effect, provided a reporting entity is taking reasonable steps towards compliance. What do we mean by that? We mean that you're making steady progress towards compliance, not no progress and not minimal progress, steady progress. And again, there's a guidance note that deals with those policy principles on our website. We can, in that period though, use our other enforcement powers. They include monitoring powers, including getting warrants to enter premises and examine documents and that sort of thing. We can issue remedial directions. We can require the carrying out of a risk assessment if you haven't already done it, or if we don't think that it's appropriate. We can require the appointment of external auditors. We can accept enforceable undertakings, and we can take out injunctions against reporting entities to require them to do things. In terms of actual penalties, most of the compliance breaches will have civil penalties rather than criminal penalties apply to them, though there are a few criminal penalties. Civil penalties at the moment are fixed at $2.2 million maximum for individuals, or $11 million for companies.
So we're not looking at a 2-cent slap across the back of the hand.
No, absolutely not.
Thanks for that. I think we can all see that the issues surrounding compliance to the new anti-money laundering legislation is of paramount importance to our industry. And the Finance Brokers Association is very focused on our community and ensuring that we maximise everybody's opportunity to comply under this legislation and to ensure that that's done at the most reasonable costs and least amount of pain, I guess, to our members. And with that, we're very thankful of the arrangements with Deloitte in supporting the initiatives of the FBAA, and that we have a training program that is now ready for rollout, and we invite any lenders that might be looking at this video now that they can contact myself through the FBAA, and we're more than happy for them to start and do their review and due diligences on that training program to get their endorsements to their distribution networks to meet the compliance regulations that they will have back to the marketplace. I'd like to thank Andrew, Tim and Liz for your participation this afternoon. My name's Peter White. I'm the Senior Vice President for the FBAA, and you've been watching LCTV.